everyone. Welcome to the Stock Trading Tutor channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free. Now, let's look at the fund performance metrics for mutual funds. So, let's look at historical performance versus underlying portfolio characteristics first. Many investors tend to focus on a mutual fund's historical performance as opposed to considering its underlying portfolio characteristics. With individual investors, whether these are stock, bond, or fund investors, return is the holy grail of their approach to investing. However, while in investments, return is certainly an important consideration, it would be best to first start with looking at an investment's fundamentals. After all, strong, consistent investment qualities are what top rated investment performances, what produce the top rated performance, not vice versa. With mutual fund investing, it is particularly important to look at all the components of investment quality and not just the performance alone. There is too much hype and misleading information in mutual fund advertising. In this regard, the most abused metric in fund marketing materials is performance data. The financial media continuously bombard us with what's hot, be that a particular fund or fund category. The personal finance magazines are filled with eye grabbing headlines about what to invest in now, next month, and next year. The pervasive investment community habit of focusing on the short term displaces investment fundamentals for big immediate returns as selection criteria. Too many mutual funds enjoy a very short period of success. The record books are full of superstars that disappear from one year to the next. Therefore, remember these two key points when considering fund performance as a top investment quality. Top performance is the product of favorable indicators. To rely on performance figures, they need to be established over a relatively long period of time. So, let's look at some of the criteria when you're measuring the fund's performance. So first is total return. A mutual fund's performance is always expressed in terms of its total return, which is the sum of the change in a fund's net asset value, its dividends, and its capital gains distribution over a given period of time. Generally, the time periods used by investment research analysts are year to date, so 1 year, 3 years, 5 years, and 10 years. Of most relevance to investors are the 5 and the 10-year periods, with the 10-year period being considered the best measure of an investment manager's ability to perform. Total return figures are calculated and expressed net of a fund's expenses, that is, those included in a fund's expense ratio. Investors in load funds should note that in fund literature and financial press, generally the performance of these funds is reported without adjusting for the impact of the sales charges. Now, next is market conditions. A fund's true performance potential needs to be evaluated within the context of the market environment prevailing during the different periods used. When we look back at total returns for 1 year, 3 year, 5 years, and 10 years, we are going to get a variety of percentages. Since the markets go up and down over the years, and the percentages that we get by measuring the performance is an average of the performance in those 1, 2, 3, 4 years. So, obviously, 10-year measurements of performance will most likely cover a mix of market conditions and translate into a more reliable long term indicator of a fund's investment management abilities. Next is analyzed versus actual total return. For any time period of more than 1 year, a fund's total return is annualized and so reported. Let's assume that the XYZ fund is said to have an average annual 5 year total return of 12%. This does not mean that the XYZ delivered an actual annual return of 12% in each of the 5 years measured. The 12% is an average or the annualized return. While helpful as a general indicator of a fund performance, you should also look at the fund's year to year actual total returns. This is more investment quality reflected in the fairly steady yearly performance rather than one with drastic ups and downs. To gauge the investment quality of a fund's performance, a smooth climb would be preferable to the unexpected ups and downs. Now, new funds and managers without a track record. Unless there are some compelling special circumstances, simply avoid funds with fewer than 3 years of performance. New managers need time to prove themselves. There are dozens of good funds with long term track records and managers that have proved themselves. With some exceptions, when it comes to your hard earned money, invest with reliable people rather than with new kids on the block. The performance disclaimer. In the investment business, the often repeated statements that performance data represents past performance, which is no guarantee of future results, has become a cliche. Of course, the real purpose of this statement is to provide liability protection to purveyors of investment products as opposed to providing guidance to investors. The phrase no guarantee, which should alert investors to the simple fact that future investment performance is subject to many variables. Next is the benchmarks. Benchmarking is one of the most important aspects of a mutual fund's total return performance. A fund's performance metrics only have meaning if they are compared to appropriate guideposts or benchmarks. In the financial field, there are dozens of indexes against which analysts measure the performance of any given investment. Comparative total returns. A mutual fund's total return investment quality is evidenced by relatively consistent positive performance as compared to its peers, its category benchmark, and an appropriate broad market index over 5 and 10-year periods, preferably the latter. Historical comparative data is useful to investors as a reasonable basis, albeit not a guarantee, for forming expectations about future investment results. Using historical patterns is better than depending on guesswork about what's going to happen in the future. Mutual fund investors would be wrong to completely disregard past fund performance as a predictor of future performance. At the same time, do not base a fund selection entirely on past results or be seduced by eye popping, extraordinary gains, which may be temporary. There are a number of fund investment qualities to be considered in evaluating a mutual fund investment. Next, let's look at the scoring of the fund performance data. By looking at the fund's total return in numbers in the performance overviews, particularly those in the 5-year and the 10-year periods, we can readily determine how a fund is performing compared to its relevant benchmarks. Look for managed funds to do better than their peers, category and index benchmarks. With index funds, try to match performance to a fund's tracking index. A positive performance differential between a fund and its benchmarks is a very favorable investment quality. It is prudent to cross check the annualized total return figure against the fund's year to year figures. If the fund's 10-year annualized total return is 9.5%, the prudent investor will look at the past 10-year annual total returns to see if the annualized return is representative of its mean performance. Fairly steady above market tracking performance is indicative of fund investment quality. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robot trading software for free.